Hello, welcome. You're watching fresh edition of Your Trades on ET Now. This is Priyanka Uppal along with me, Anisha. Hi, Anisha. Anisha, what a day today. Despite strong macro cues, but the Friday effect continued on Monday also.
Clearly, I think market is not in a mood to kind of let go. Every time we see those record high levels, there's a pullback, and that's exactly what played out today. Despite the strong opening, we did manage to end in the red.
Yes, of course. And then stable dollar, strong macro cues, crude continues to trade lower. Then also we opened at the highest point of the day, but later we started a downward spiral, continued today for the second day. VIX did spike 14% today, and of course, whenever VIX spiked, that means extreme volatility on the on either side of the. So we saw last day of the week, that is Friday. Also, we saw VIX spiking that day. Also, the second day that VIX has spiked today, and now it is at the highest day of the whole year. Also. So, but then it was clearly a defensive buying day today. We saw IT, FMCG, Pharma, the top gainers. Realty Pack also gave good moves on the back of the good earnings. And of course, PSU stocks saw great pressure today. Power stocks, PSU banks, they were in pressure today. And but wherever the earnings came, strong earnings came in, Anisha, Street rewarded that also.
Yeah, clearly was the case with Britannia and Kotak Mahindra Bank today. Kotak Mahindra Bank, of course, saw the drubbing in the week gone by, was under pressure. The valuations had become compelling. We had got the upgrades from the likes of JP Morgan, CLSA, Nomura, etc. And the stock got fairly rewarded with that gain of around 6%. Not just that, Britannia, of course, the numbers looked in line with expectations, but it's a commentary about the volume going forward that had the street excited. So that stock ended with a gain of almost 6 to 7%. Godrej Properties up around 10%. Again, that 27,000 crore revenue guidance coming in for the coming year in terms of the pre-sales, that is, was something that was liked by the street. Can't say the same about Titan. That jewelry segment margin clearly not liked by the street. Also, we're watching out for what happens tomorrow. Today, of course, there weren't many Nifty earnings, but tomorrow Dr. Reddy's will be in focus on account of that. So we'll be watching out for what the company delivers. But let's take it across to Mileen Vasudeo, the Senior Technical Analyst at Arihant Capital Markets as well. Mileen, hi, good to be speaking with you. What do you make of the market texture right now? Clearly, the volatility is something which is very high, and that's keeping the upside on both Nifty and Bank Nifty quite checked.
Good afternoon. If you see on the daily chart, if you see the Nifty is hovering at the 50-day moving average line. Now the 50-day moving average line is becoming flat, and it is currently at 22,298 levels. Now, as long as that level holds, there is a fair chance that again Nifty is likely to head higher. So we are taking a call that 22,290 level would be a make or break level for Nifty going forward. Now, in tomorrow's trading session, we feel that 22,390 as well as 22,350 level is very crucial. For the first hour, if it holds that level, then again, yes, Nifty is likely to head towards, say, 22,530 and 22,640 levels. So watch out for 22,390 levels in tomorrow's trading session. Similar to Bank Nifty also, Bank Nifty is also trading somewhere. It has got good support at somewhere around, Bank Nifty has got good support at around 48,700 and 48,800 level. So as long as that level holds for 1 hour, then yes, you could see again bump up in Bank Nifty. So we are positive on Nifty and Bank Nifty. But yes, keep a strict stop loss for Nifty 22,290 levels.
Mileen, since you mentioned that you would be a little watchful on the markets from here, so which would be the stocks that you would recommend at this point in time?
Today I'm recommending two stocks. One is Coromandel International, which is currently trading at 1221 levels. Stop loss 1180. And target would be 1277 and 1320. The second stock which had gone up nearly by 10% was Godrej Property. Currently trading at 2838. Keep a strict stop loss of 2800. 29 and 2940 could be achievable in this counter.
We'll watch out for those levels. Thanks, Mileen, for making time and speaking with us. But we also spoke today with Rajiv Thakkar. He's, of course, the Chief Investment Officer at PP Fast Mutual Fund, and he believes that there is no growth in IT services right now. Listen into his take.
IT services, again, growth is not there right now. numbers are very, very flattish, and it goes through its cycles. Right now, people are worried about what will be the impact of the generative AI on IT services, and whether uh, fewer people will be required and pricing will come down. I think it's going through a cycle. Valuations are reasonable over there. That could be one space. The other space, as you can see, we are invested in some energy related utilities or energy related mining companies and things like that. So, again, to tie in maybe some of the comments at Berkshire Hathaway meeting, Mr. Greg Gable mentioned about the incredible uh, electricity demand that he's seeing and how much of capital expenditure they will need to do in that space. He spoke about doubling of energy requirement and tripling of energy requirement in some areas in the next 5-6 years. So that is the extent of energy demand that is coming up, and it is coming from two sources. One is the data centers and AI, which is very, very intensive, so energy intensive. So a lot of demand is coming from there, and across the world, we are trying to shift away from fossil fuels to electric vehicles. Now, that also will result in a huge amount of electricity demand.
Though quite an interesting day for IT, though he had a contrarian view, but then very interesting news coming in from energy. We stay for a short break here. More to come when we come back. Don't go anywhere. Welcome back. You're watching Your Trades, and now more from the derivative side. For derivatives, it looks like the bears are in the complete control. At least not a good news from in terms of the trend which appears here. Nifty, there is a mild short built up and flat trend which appears on Bank Nifty from the action from the derivative side. VIX, of course, was one reason. It spiked 14% today. It's at the one-year high intraday basis, which was above 16. The active calls where we saw the maximum of the call writing, which was at the strike of 22,500, 22,600. Now this becomes the immediate resistance level also. Support we saw, it has also risen a little. Support level is at 22,300, 400. These are the strikes where the maximum of the put writing was also seen. So we need to really be watchful from here, Anisha.
Yeah, but looks like the consolidation phase is likely to continue. So a floor at 22,400 and a resistance at 22,500, telling you that the band is going to be quite limited. But time now to put the spotlight on the big stock of the day, and the story of the day has to be the kind of big moves that we have seen on the power financiers, the likes of PFC, REC, etc. We understand that, of course, RBI has come out with draft norms, but what could be the implication of that and what are the brokerages saying? Somit, my colleague, is joining us with all of that. Hi, Somit.
Well, if you see, we had seen a sharp fall in the share prices of REC and PFC post RBI came out with the guidelines for higher provisioning for projects which are under construction. But now what we are hearing from our sources in the company is that these guidelines are still in draft phase and will be implemented only post there has been a consultation with stakeholders. But what is the more important part, that is what we are understanding from our sources, is that even if these new guidelines as it is, if they get implemented, it will not impact the profitability of the company, and that is what we are understanding from our sources. And also what we understand is that REC will not be required to do any more additional provisioning even if these guidelines get implemented. So even if these guidelines get impacted, there won't be any impact on profitability, no impact on ROE, that is return on equity, and also the company might not have to make any more provisions post implementation of these new norms, which means that their growth also, which was one of the factors that Street was understanding that the growth might get impacted, will actually not get impacted because there won't be any additional provisioning required by REC to do post the implementation of these new norms. And hence we are also seeing some kind of a recovery when it comes to REC and PFC in trade currently, and this is what we are understanding from our sources in the company.
Additional provisioning requirement will be appropriation of profit and via the creation of impairment reserve. So no impact on the ROEs and the PNL. However, we have estimated 200 to 300 basis points impact on their capital adequacy ratios. Of course, they are fairly well capitalized at the moment at 22% plus. So it's unlikely to be a big concern for them, unlike some PSU bank counterparts. However, from their perspective, what is worth flagging is that because your adjusted net worth in our estimate, will be impacted by 8 to 12% on the day one of the rollout of this regulation. The valuation multiple you would ascribe and the target price you would arrive would also be consequently impacted because of lower adjusted net worth.
We do not foresee much impact in our loan financials vis-a-vis the companies who is having project financing of fossil fuel or having longer duration or other infra project, general infra project, be it house building or etc., which is having a very longer gestation period, where the provisioning requirement will be required more. Significant portion of our books are already commissioned, and maybe around 40% will be on under construction stage. And in that also, fair amount of progress has been made. Net around 25-30 will be in true sense and spirit project under construction, for which you may have to look into marginal provisioning. As far as bank is concerned, yes, since bank have not adopted this ECL provisioning norms, bank will have to face it very harshly, because they have to have additional provisioning. And in case of banks, if their books will be having this long gestation period projects, then they have to have this additional provisioning. Governance and compliance is nothing but discipline. So when you adopt discipline, initially it is painful, but in due course of time, it will enable speedy development.
And so that's the same kind of comments which is coming in from REC also, where they mentioned that these are the draft guidelines, and if implemented, they would have limited impact on the profitability. But let's see how it pans for the entire space. Moving further, several stocks continue to be in focus on the back of Q4 earnings today. Let's listen into what Titan, Raymond's, Godrej Properties, and Tata Tech has to say on the earnings.
I think post the election there will be a certain stable demand as well. So we are quite confident from a market share opportunity point of view. From a medium term, we have actually been focusing more growth than margin. The near-term opportunity in India is very strong. We're talking about very good growth in the top two income classes of this country, which
over the next 3-year period, we intend to double our apparel business with a kind of retail expansion. We have already opened new stores of more than 200 new stores, and we plan to open another 350 to 400 stores over the next 2 to 3 years.
We do expect the financial year ahead to be another very good one. In FY24 itself, we did about 22,500 odd crore of sales. So this is about 20% growth on that, which is our long-term aspirational growth rate that we'd like to maintain.
We're very encouraged with the progress that we're making on a number of the deals. A lot of innovation comes from those companies, but there are some volatility issues that we have to grapple with, and I think we've successfully done that in the context of the last fiscal year. So we're very pleased with FY24 and the solid finish to the year that we had in Q4.
So that was the commentary from the newsmakers on ET Now, but we're not done with news yet. There are a lot of stocks which are buzzing around on account of news flow. My colleague Gaurav is joining us to talk to us about all those buzzers. Hi, Gaurav.
Well, yes. Today, let's begin with Cast Trade, because we have got 4Q numbers, and if you look at the numbers were actually strong. So revenue was up almost by 51%. If we talk about net profit, that was up almost by 42.9%. We saw a fall in EBITDA margin, which is now at 33.8% versus what it was at 41.5% on a YY basis. But if we look at the absolute number, it increased almost by 23% on a YY basis, and that is why we saw a positive momentum coming up in this stock. Next, let's talk about CG Power, because if you look at the numbers, revenue was up by 15.2%, but the net profit was down by 45.2% on a YY basis. Even in EBITDA margins, those were down to 13%, which is a fall of 152 bips on a YY basis, and that is why we saw a fall coming up in the stock price after results. Next, let's talk about Punjab Chemicals, because this company also came up with weak set of numbers. So revenue was down almost by 8.2% on a quarter-on-quarter basis. PAT was down 78.5%. Now it stands only at 2 crore rupees, and EBITDA margins also fell almost by 67% on a quarter-on-quarter basis, and that is why we saw this stock went down in a day-to-day. Next, let's talk about rides, because as per sources, company has now got an order for Vande Bharat train trains safety test order. So RITES will undertake the safety assessment for Vande Bharat, and on back of this we will definitely watch out for this stock. And last, let's talk about Caplin Point, because the company has got Colombia's MVMA's approval for soft gel capsules, and with this they will be foraying into a new market which can actually help the company to grow further, and that is why this stock is also going to be in focus. So all in all, on back of numbers as well as on the news flows, we will definitely watch out for these stocks in the days coming ahead as well.
Right. Thanks very much, Gaurav, for compiling the entire list for us. Let's move forward. Demand will improve post-elections and monsoon, says Britannia's management in a conference call today. They expect double-digit volume growth this year. Let's listen to it. Exactly what did they say?
Closely monitoring the commodity situation and assessing what are the actions that we need to take as we go forward. We remain vigilant on the competitive pricing front, and our strategy will be to remain focused on driving market share while sustaining profits. Frankly, we are going to drive top line hard this year. It's tough. The year, how the last year ended will sort of, continue for a few months. But we are hoping that as the monsoons start to come and, the election results come, etc., things will look much better. So we are going to make it, a mission to make sure that we get the top line to grow much faster. I think the volume growths this year, we expect them to be quite solid. Obviously, barring the entry into the year, which is pretty similar to the year that's gone by, and post-election, post-monsoon, I would think that post-election, post-monsoon, we would be aiming towards a double-digit volume growth for sure.
Okay, so it was definitely a good day for Britannia today in terms of the stock prices as well, and the management quite hopeful about the future. But what's the latest coming on Kotak Mahindra Bank? Because that was one of the top contributors to the index today, post the upgrades we had seen on back of a strong Q4. Listen into what the editor's take is on how the trajectory for Kotak Mahindra Bank is expected to be.
Look at the template of HDFC Bank. Post numbers and after the merger of HDFC and HDFC Bank, there were hardly any sell calls, but the stock underperformed and it continues to underperform. I think in the near term, Kotak, while it may appeal to a long-term investor because of the recent leg of underperformance, the sell-off post the RBI news and the pure price to book at which it is sitting at, and the fact that the quarterly performance continues to remain strong. You're right when you say that the underperformance, the downside in the stock perhaps could be limited. But this may not be the best time to really buy into Kotak Mahindra Bank if you have a near-term outlook of, let's say, 3 to 6 months. Because frankly, in the market, when the momentum is out and when other banks are giving you a better, compelling growth, in the short term, money would actually migrate to that. Typically, the positioning of Kotak Mahindra Bank and HDFC Bank was that they always do well when the economy is in some kind of a downturn because their books are strong. And they tend to underperform when the economy is in a solid upturn because they're very conservative with their lending. So that in a sense becomes this entire impediment for Kotak. It is cheap. It may remain cheap. It may not fall much. But in the near term, based on this quarterly performance, are we in for a solid V-shaped rally? The answer to that is no. More than the absolute damage, it's the perception where Kotak has suffered post, the post Reserve Bank of India decision on acquiring new digital customers. While the bank is maintaining that the existing customers, nothing will happen, core banking operations will continue. So markets would say, okay, let's wait it out, let's watch. And there's a CEO migration, which also is at play. So markets would, in my book now, Kotak Bank really becomes a stock where if you buy, you should have patience to hold because you will not see gratification in the immediate term.
All right, that's the editor's take coming on Kotak Mahindra Bank. But moving on to the earnings, which lies ahead. What kind of estimates are we penciling in for Dr. Reddy's Lab Q4 earning? Let's go across to Srishti for more details on this. Srishti, over to you.
So this time from Dr. Reddy's, we are not expecting much because the company is expected to report a muted growth on a sequential basis, and the major reason could be their US sales, which is expected to be flattish this time around, though on a YOY basis there could be a 32% jump when it comes to their US sales. When we talk about the overall numbers then definitely you will see a good growth on a YOY basis, but sequentially, like I highlighted, we are expecting a muted set from revenue. The expectation is of 7,237 crores. EBITDA is expected at 2,016 crores, and the margins are also expected to be flattish at 27.9%. While on the profit, we are expecting a sequential decline of 7%, and the number is expected at 1,290 crores from Dr. Reddy's. And let's talk about the factors that will be at play. So the US business could show a double-digit growth. $412 million is the expectation over there, and the push could be from the benefit from the stable price erosions, as well as when we talk about the prospects of the business, then on their base business, the incremental competition is expected to impact them a little bit. When it comes to their domestic growth, that's expected to be up by 10% on a YY basis, while in the diabetes, that's expected to be offset. There was a good growth in this particular segment, but there was a double-digit decline in the cardiac therapy. So these were the factors at play when it comes to their domestic business. When it comes to their other geographies like Russia and other CIS countries, that's expected to show a rise of 11% on a YY basis. So that was on the numbers and the commentary as well. But going forward, we will be watching keenly on the management comments on the key approval and the launches plan in the next 12 to 15 months in North America, the GLP-1 opportunity that they are looking forward to, and the updates on the filing, approval and launches in China market specifically. Those will be the key monitorables. Back to you. Okay, Shrishti, thanks so much for those updates as to what we should expect from Dr. Reddy's. But with that, we're completely out of time on this edition of the show. From Priyanka, myself and the entire team who put the show together, thanks so much for tuning in.